Hello everyone, welcome to Fearfully Greedy. I know the name is kind of a gimmick, but almost everything is taken these days in YouTube. And I found this one, it was free, no one took it. And I think it has some name to it. It appeals to the kind of investing I do. The Graham, Warren Buffett, Peter Lynch, all that, Phil Fisher, all those great investors. I try to apply those concepts to my investing strategy. Here we will discuss my portfolio and then also cover some news, some investing topics, and so on. As of now, my portfolio has six investments and cash, right? At the moment, you can see here all the companies: Biogen, Warrior Metcall, Intel, Teekay Tankers, Berkshire Hathaway, and Rao Lietuva. I'm sure I butchered that one, but I haven't heard anyone pronounce it. The first investment I did on the 13th of July, and every month I push 500 euros into the account and try to deploy that capital in the most intelligent way possible. Here I will show you the trades I have done since then. The first one you can see 13th of July, and then it goes up. Next week Biogen, some weeks later Teekay Tankers with Intel, then I rebalance Biogen. I also rebalanced Intel Corp that day, and then finally, it's a month ago almost, I added Rao Lietuva. It might look like a super concentrated portfolio, but if you know what you're doing, you should be good. You should be happy with a concentrated portfolio. If you like the companies you have, you should want more of them, not less. So I don't think we will dilute the portfolio a lot. Also, full disclaimer, this is not financial advice. This is for entertainment purpose only. And please seek help from a professional before doing investing on your own, or do your own research. Here you can see that the account has almost 9,000 euros and 300 euros almost in cash, right, at the moment. I will show you the deposits, how it works. Every month, let's say I put 500 euros around that inside the broker. I use the Giro, but you will see that the UI is not the best in the Giro. But you can see first one, 17th of April, 19th of May, the next one, 17th of June, and then on, right? 500 euros every month. They changed it on the last 2 months. Now it's called Flatex Deposit, but same idea, 500 euros in. I have an extra transfer of 1,500 that I had some extra cash that month, so I put it inside the account, right? But in general, I think we will add 500 euros every month and see how it goes. Although the Giro is great, very low fees. I had some previous trades here, and also we don't have an evolution, like a cool graph that we can show on YouTube. So I think I will use Sharesight to show you the progress of the portfolio, to get a clearer view on the appreciation, on the price, on also the currency and the total result. Here you have Sharesight. So you can see all the trades with the appreciation of them by capital gains, dividend. I will show you an example of one. Here you can see the quantity, share price, exchange rate, brokerage fee, and total amount. I try to make the total amount be exact as the Giro, so we can keep good track of that, right? See, you can see it's almost exactly the same by 1 cent difference. So I try to add it as close as possible. And this way we can see the evolution. So you could see we started with nothing and then we kept building up. The capital gain at the moment is 8%. Dividends, we only had one dividend, so almost nothing. I don't seek dividend, honestly. It doesn't matter to me. Then currency gain, in my daily life I use euros, so I want to see compared to that how I'm doing. And then the total return gets slashed in half by the current currency loss that we have. Here we can see like a 12% loss on Biogen, 15% appreciation on Berkshire, 17% on Warrior Metcall, 5% on Intel, 16% on Teekay Tankers, and it's almost flat on Rao Lietuva. But these are small movements on the market. We're looking for the real appreciation on the market, because I really feel with this portfolio I'm buying 50 cent dollars. So that's my margin of safety, 50% at least. And in some positions, I think it's more than that. Although, as I said, no financial advice. Do your own research. Now we will present the companies. First, we have Biogen, 27% of the portfolio. They are a pharmaceutical company, especially in neurological and neurodegenerative diseases. It's quite an old company, and they started with multiple sclerosis, and then they built up. It's a ridiculous cash generator, great culture and management. The pipeline is very wide, although they are, as any pharmaceutical, they are trying to sell you like it's a PR purpose on every presentation. But do your own research, get some information from people in the field, and then judge the numbers yourself. Then pharmaceutical business, super high margin and returns, very strong balance sheet in this one. And we bought it for this free cash flow. Also, we think the pipeline looks very good. Then, as any value stock, we have some issues. Like they are always hurt business by something. And then we try to assess how big is the damage, if it affects the economic basis of the business. And if not, you invest because you get a much better valuation. Usually the drawback in pharmaceuticals is that you pay a high price for them. Not in this case. So we have a very fair valuation. And then the problem with this one is that their main seller, their main drug is Tecfidera. It's 30% of their revenues. And a generic version launched last year, so they are losing revenues there. And then also they are launching an Alzheimer's drug. They are trying to get it approved by the FDA. And what happened is they got a bad review from the committee. So that's why the stock went up on news of this drug. And then once the meeting happened and finally it was bad news, it plunged back down. But we had a fun movement with this stock. So it was at 240 and then it moved up to 350 in one day when the good news came. And the next day when the bad news came back, it was 240 again. So wild ride, but we're here for the long term. I like Biogen a lot. I think it's a great company. Second position is Warrior Met Coal. I like this stock a lot. It's 26% of the portfolio. Although it's coal, it's not the sexiest thing. I think the returns on this can be very, very good. So they mine coal for steel production. So they hard coking coal, and it's called met coal, right? And they come from a company that went bankrupt, Walter Energy, and the creditors IPO'd in 2017. 1 billion market cap. They have usually huge revenues, very good free cash flow but only on a stable pricing. When the demand is good and the price is stable, we get very high returns here. But they are a low cost producer and very high quality met coal. Also, they have a project called Brook Creek that will virtually double their revenues. So that's very promising in the next 3, 4, 5 years. But they stopped it because this year they are getting hurt a lot by COVID. So it's not looking great at the moment. But they are still free cash flow positive. And once they will return into more stable environment, I'm sure we will recover that. Then they still have a very strong balance sheet in the current conditions, very honest management. I love their management. And then the issue with this, it's considered or valued as an energy coal stock. So not the greatest future. And then the met coal price is very depressed at the moment. And it's a business that is very dependent on this price. So it's not the greatest business. They don't have pricing power. So they will always depend on that. But my bet is we'll return into more stable met coal price. And the consumption will keep growing as every year. Third stock, Intel Corporation, 16% of my portfolio. Huge mega cap, 200 billion. Well, maybe not mega cap, huge cap, market cap. They make a lot of cash, 70 billion revenues, free cash flow over 20 billion, another ridiculous cash generator. Huge margin on the business. It's a great business. They are in a transition phase from PC processing to data processing. That will have a better or bigger addressable market, and they have also changed in the last 2 years into a much smarter capital allocation, very good buybacks, solid dividend, and much better benefits for the shareholder. the culture there is very productive. If you know about Intel, if you research them a bit, you will see that's a very productive environment. Why it's undervalued? First, they got hurt by AMD growth. So what happened is AMD is growing their revenues a lot, although they are the segment of the market, it's ridiculous compared to Intel still, but they are growing. Then they have a stagnation on the top line. The revenues are not growing a lot on the last years, and they don't have the top technology on the mix or the faster CPUs anymore, right? Although that changes. Like in some years they have very good research departments, and in 2 years they might be back on top. So who knows? They invest a lot of money in that. So I'm sure we'll get back to that. And then they have declining revenues on Q3, Q4 2020. And also they sold a NAND memory segment that wasn't a huge cash generator. So they sold it for 8 to 9 billion, if I'm correct. But the market doesn't like getting cash now for no cash in the future. So they got hurt from that sell, right? Although I think it was a good capital decision. We're here for the long run, also for Inter. I like the company a lot. Next up, Teekay Tankers, 13% almost of the portfolio. They are a tanker company and they are subsidiary of Teekay Corp, right? What a tanker company is they have ships on the sea and they move oil around, right? 400 million market cap, huge amount of revenues, huge amount of free cash flow compared to market cap. Also this year what happened is since oil production kept going but consumption went down for COVID, oil had to go somewhere, so they had to fill almost like a lot of ships and for a very high price. So they got 4 years of revenues in 1 year, right? So that's very good. What they did is they deleveraged the business a lot this year, which is great. Also, the valuation is ridiculous. If you see the usual free cash flow, it's almost like it's 4 times the market cap. That's how ridiculous it is. Then another thing going for it is that the age of the fleet, average fleet is going up, while the order book is going down. It's on historical minimums on the last 20 years. So what we'll have is a shortage of vessels in the future. So I think that will also help on having a lot of the fleet working. Then also the US has started exporting, being a net export of oil. So that also helps the business and getting more trips. The issue is, first, the oil demand won't be super hot on the next year or 2 years or so, on the short term, mid term. And also oil tends to get a bad rap. It's not the sexiest thing. It's not a Tesla, it's not an Apple. But I think it's super undervalued. Next up, Berkshire Hathaway. If you're a value investor, you know this one, right? So 8% of the portfolio, 6th biggest company in the US. And what it is a conglomerate on a background of insurance, and the management is Warren Buffett, charity monger, many others. But why we bought it? Sentimental. I bought it for a sentimental purpose, and because I think the valuation is not on par of the other investments where I'm doing. But good things, it's very diversified. The management, best you can get if you're a value investor, you think that. And they make a lot of cash still, but the size will drag on this investment. And also, I said the valuation, we're not buying 50 cent dollars here. Next one, last one, Rao Lietuva. I said the name, I haven't heard it pronounced anywhere else. 6% of the portfolio. It's a subsidiary of Rao, Russian company, and they are a supplier of energy in the Baltic countries. What it is a huge player on its sector. It has a free cash flow of around 10 million, 60 to 70 million of market cap, and they pay exclusively like a dividend. So all net profits are dividend in this one. Very cool. That can be a plus for you or a minus, but well, for me, it doesn't matter. I look for the cash it generates, and if they reinvest it or they send it to me, it depends on how well that cash is used later. And what's the issue? Not a compounder, so they don't invest. They are not trying to grow the revenues by a lot. Also, it's not followed, and then it's on the Warsaw Exchange. So it's just a very hidden stock, but it's a huge payer. The way I like to think about this, about the companies I have in the portfolio, is that we have a company. let's call it Fearfully Greedy Incorporated. And we have 6 sectors like pharmaceutical, mining, semiconductor, tankers, conglomerate, energy cell. They do more things than this, but in general, it would be that, right? And then all these, you can consider them like subsidiaries of the company. And you have these small, very, very small companies that they make some earnings. So you can see here 6 different subsidiaries. They make these earnings. They might send them to me or not. They might reinvest in themselves. And then on my book, so from this, you can even calculate like a P. So what would be the P of our Fearfully Greedy Incorporated? If you weight them out, these earnings, I get to a 6.7 price to earnings ratio. That means in 6.5 years, I will have earned back the entire cost of the business, right? So that's a ridiculously low amount. And compared to the global market with such depressed earnings and high valuations, I think it's great. Then you can check some other metrics. If we grab like the 5-year average return on equity and return on capital employed of all the business, and then we weight it out for the weight on our business, on our portfolio, 44% return on equity over the 5 past years, and almost 70% on return on capital employed. That's super high returns. Very, very good quality business. Then about updates on the portfolio and new videos, I will make a video or an update once I build a new position, once I exit one of these positions, or also when I get some news on these underlying companies on my portfolio. Let's see what I decide, like if something really changes on them. Should I buy more or sell? And judging, so you can see my mental model on this. Then if we get some major appreciation or depreciation, I might also comment on that, see how far we get from true intrinsic value that I believe these companies have. And then also about news on the market. If I want to comment on something that might affect my investing thesis, I will also comment on that. So, well, thank you for sticking around. Feel free to subscribe if you want to follow along on the journey. Be safe.